Marketing always matters and we do it well. And everything is guaranteed, service over sales. Keep 100+ clients always satisfied. So call me Neo, what you need just to strategize. One eye on the market here to make you profit.
What's up, guys? Welcome back to the real estate market statistics for February of 2023. We're going to be taking a look at the newest numbers and trying to figure out where things are going from here. So let's dive right in. The average sale price, $333,351. That's down 11.4% year over year. So from February of last year to February this year, that's negative 11%. So you can see it's been declining pretty consistently since about Q3 of last year, end of Q3 last year. And we're still seeing it decline. I will say that when you look at median sale price, which is not a factor that I've been showing in previous videos, so I'm not adding it here, it actually rebounded this month. So you could use different statistics to show different things. If somebody were to show you the median sale price for February, it would look like we had a rebound and we'd be having a different conversation. But to stay consistent with the way we've been presenting data so far, obviously I'm going to keep using average sale price. So if we look at the last 3 years though, obviously we've declined quite a bit from February of 2022. But if you keep going back, we're still quite a bit higher than the previous 3 years. So if you bought your home 2 years ago or further, you've still got plenty of equity. Again, going back, $313,985 in 2021, and all the way down around $250,000 in 2020. So the moral of the story is we saw such a huge boom over just a couple years. I mean, if you look at this, from 255 to 376, that's huge over a 2-year span. Of course, we're going to be pulling back some. This only makes sense. So, again, if you're in here, I don't really think you have much to worry about. Price per square foot, $206. Again, it's been pretty consistent. Where we've seen average sale price drop off, this has held more. It's held a little bit better than average sale price has. What that typically means is people are just buying a little bit smaller homes. They're not being quite as extravagant with their purchases as interest rates have gone up and their affordability has been hit. The number of new listings has spiked again, thank goodness. We had a huge fall off throughout 2022 and the inventory is just super low. So to see it rebound in December, then January, and now again in February, it just makes me feel a lot better about where things are going. And it gives buyers some options as they're getting back into the game now that we're seeing tax returns and things like that. Comparing to the past 3 years, we're still quite a bit below where we would typically see it. But it's getting better. When we were comparing here, it was pretty ugly. But 255 to 331, 293, and 401, still lower than we'd like to see, but we're heading the right direction. Number of homes for sale, we're at 418. Again, inventory is just super low, and this shows it here. It was low throughout the pandemic because we just had a huge buying surge, which drove prices up. We can just see it just dropping off again now. Number of pending sales is spiking again to 254. Again, still lower than we would like to see, but it's nice to see these numbers rebounding since December. It's pretty much in line actually with the last few years. So not a big concern here. We'd still like to see it, increase a little bit. One thing that is a little concerning is we haven't seen it translate into closed sales yet. Closed sales are still quite low for what we would expect. And if we look at the past few years, you can see that we're at about, almost half of what we would like to see as far as closings, especially compared to how many pending sales we're seeing. Days on market, still up around 29. So after sitting here under 10 days on market for like 2 years, we've been sitting up here around 30 days, which is pretty normal, I guess, for your typical market. So this is not crazy or unexpected. As inventory picks up, if buyer activity doesn't pick up, this might increase. And if buyer activity does pick up but inventory doesn't, we might see days on market start to fall again. Months of inventory. Again, we were talking about how much inventory there is. We dropped again down to 1.6 months of inventory. We talk about this in every video, but the good way to look at this is 5 to 6 months would be kind of your average market. Anything lower than 5 to 6 months would be considered a seller's market. And anything more than 6 months of inventory would be considered a buyer's market. So, despite average sale price declining, we're still in a seller's market by a lot when you look at the months of inventory as the criteria. So, in summary, Average home prices are still slowly declining in 2023. The market's unlikely to pick up again until spring and possibly not until Q3 of 2023. Price per square foot is $206 per square foot. And even as the average sale price has declined, the price per square foot has been staying fairly consistent throughout 2022. So new listings started rebounding in January, and thankfully it's continued in February. As I mentioned, available inventory has been a big problem. There's really not much on the market for buyers to look at right now, and so it's really refreshing to see these houses hit the market. Pending sales are still increasing, which is a good sign moving forward, but closed sales are still quite low, and they seem to be lagging behind pending sales, which might be a concern. Homes for sale are still declining all the way down to 1.6 months of inventory. Again, particularly when you're looking at months of inventory as the criteria, 1.6 months would be considered a huge swing to the seller's side as far as being a seller's market. But again, when you look at price, you might think of it a different way. Right now, buyers are able to negotiate closing costs and a lot of other things that they weren't able to a couple of years ago. So a year ago, buyers were paying tens of thousands of dollars above asking price. They're paying for their own closing costs and the repairs, and they were paying thousands more to cover a short appraisal sometimes, all just to have a chance at the home they wanted. Today, buyers can negotiate a better price, they can get seller assistance with closing costs, they can stop writing these crazy appraisal gaps, and this is because there isn't the same amount of competition on the homes that they want. Now sellers, this is where we are, and this is important. Prices have held up as well as we could possibly expect considering what the Fed has been doing with interest rates in 2022 and now heading into 2023. Tulare County is highly desired and it's a special market which has given us some protection. When you look at the average income versus the home affordability, Tulare County is the best and most affordable in California. So it drives a lot of these people from the Bay Area or from the LA market who can't afford to live there anymore. It drives them here and kind of protects our home prices and just gives us a steady stream of demand even if it starts to die off locally. So if you purchased 2 years ago or more, you definitely have strong equity in your home, which reduces the risk of a major wave of foreclosures that causes a crash in home prices. A lot of people are talking about this coming housing crash. So far, we've just seen it kind of trickle down. But the big concern is that a wave of foreclosures could put a whole bunch of homes on the market and it could cause a bigger crash in home prices. I just don't see it happening. People have too much equity in their homes right now, and the loan process isn't as sketchy as it was back in 2008 when we had that problem last, and that's kind of what people are thinking about, I think, in the back of their minds. So that said, the Fed is committed to stamping out inflation, and even with rate hikes every meeting, the positive impact so far has been minimal. So we haven't really seen inflation. We've kind of seen it go up and down. There'll be a good report and then a bad report and a good report and a bad report. It just kind of feels like a little back and forth, but we haven't really seen things feel better for the average consumer yet. I do think that's coming soon, but so far we haven't seen it, so they may just keep pushing rates up. In fact, many experts believe the actual recession is coming in mid-2023. I'm not one of those. I think it's going to be a soft landing personally, but the fear is what drives prices down. If you plan to sell your home within the next 2 years or so, this may be the best time to do it. Inventory is low, new inventory is low, and homes priced properly are selling quickly. And you can still make a nice stack of profit before things potentially get worse. I want to thank you guys for watching. We'll be back next month with another market report. Take care.
Having a little trouble, ask David, huh? When they never get it done, ask David, huh? They gon' wanna give a hand, ask David, huh? Need someone to set the day, ask David, huh? David, huh? David, huh? When they all falling short, pass me the baton.